Mortgage rates over 7%.
Yeah.
Highest we've seen in months.
Makes you wonder.
Makes you wonder, what's in store for anyone trying to buy or sell in 2025 right now?
Absolutely.
Well, you've come to the right place.
All right.
We're diving deep into some fresh housing market data to help you make sense of it all. Think of it as your cheat sheet for navigating the wild world of real estate.
And it is a wild world out there.
Oh, yeah.
We're seeing some pretty interesting trends emerging.
Yeah.
Trends that could have a big impact on your next move.
Exactly.
Yeah.
Our guide for today's deep dive is an article from Housing Wire by Mike Simonson
Okay.
called The Two Big Housing Market Trends to Watch in 2025.
Simonson really hits the nail on the head.
Right.
Highlighting the two big forces shaping the market. Affordability and the possibility of more sellers finally jumping back in.
Okay, so let's unpack that first one.
Sure.
Affordability or the lack thereof.
Right.
I mean, a typical mortgage payment in 2025 is starting at a record high of $2,290. That's enough to make anyone think twice about buying.
It's a tough situation, no doubt.
Yeah.
Think of it this way. It's like trying to climb a mountain that keeps getting taller.
No.
Home prices are up, and those high mortgage rates are like carrying extra weight on your back.
So are we talking about a nationwide price drop anytime soon? Because my friend in Florida keeps telling me things are cooling off down there.
Well, your friend might be onto something.
Yeah.
Some southern markets have seen a bit of a dip, but we're not talking about a major nationwide correction just yet.
Okay.
And that's where the second factor comes in.
Right.
Interest rates. They're really the key to unlocking better affordability.
Simonson even suggests that if rates were to drop significantly,
Yeah.
say below 6%, it could be a game changer.
He uses this term five handle,
Okay.
which just means getting those rates to start with a 5 instead of a 6 or a 7.
Right.
Now, whether that actually happens is
Yeah.
another story.
So walk me through this. How could rates possibly drop that much when everything seems so uncertain right now?
Well, imagine this. The economy starts showing signs of real strength
Okay.
and something called spreads,
Spreads.
which basically reflects the difference between borrowing rates for banks and what they charge you.
Okay.
Those spreads start to tighten.
Hold on. Explain that spreads thing a bit more.
Okay.
It sounds like something from a financial textbook.
Fair enough.
Yeah.
Imagine a bridge between what banks pay to borrow money
Okay.
and what they charge you for a mortgage.
Uh-huh.
That bridge is the spread.
Got it.
If that bridge gets narrower,
Okay.
meaning the difference in rates shrinks,
Mm-hmm.
it becomes cheaper for banks to lend, and that could lead to lower mortgage rates.
Okay, so positive economic news.
Yeah.
Plus this spread narrowing.
Right.
That's the recipe for those five-handle rates and maybe some breathing room for buyers.
Potentially.
Okay.
But it's far from a guaranteed outcome.
Got it.
We've got to keep a close eye on the economic indicators to see if this scenario plays out.
All right, let's move on to that second big force Simonson talks about, the potential return of sellers to the market.
Yes.
I feel like I've been hearing about a seller's market for years now.
You're right.
What's changing?
The past few years have been a real seller's market. The number of homes for sale has been way lower than before the pandemic.
Really?
Think 60,000 new listings per week compared to 80,000 in the past.
Wow, that's a huge difference.
It is.
So what makes anyone think sellers are coming back?
Well, something interesting happened in December 2024.
Oh.
We saw a big jump in new listings. A much bigger jump than we've seen in the past 6 or 7 years for that same time period.
Wait, are we talking a little jump?
A big jump.
Okay, a big jump.
Total new listings,
Oh.
including those homes that got listed and sold almost immediately.
Right.
We're up 21% compared to last December.
That's a pretty convincing sign, right? Does this mean the seller shortage is over?
Hold on.
Okay.
There's a catch.
Uh-oh.
December is a bit of a strange month because of the holidays.
Right.
People aren't always focused on buying or selling houses during that time.
So this could just be a holiday blip?
It's possible.
Okay.
We need to see if this trend continues into the new year to really know for sure,
Got it.
but it's definitely something to watch closely.
Okay, so we've got these two big trends in play.
Right.
Affordability on a nice edge
Mm-hmm.
and the possibility of more sellers dipping their toes back into the market.
Yep.
Now let's get down to the nitty-gritty
Okay.
and look at some of the hard data from Simonson's article.
Sounds good. Let's start with inventory.
Yeah.
Right now, there are about 651,000 single-family homes up for grabs across the country.
651,000.
Yep.
That sounds like a lot. Is that more or less than usual for this time of year?
Well, it's actually down about 2.5% compared to last week.
Okay.
But remember, this is the holiday season.
Right.
People are busy with family and festivities.
Yeah.
Not necessarily house hunting.
Makes sense.
So it's normal for inventory to dip a bit around this time.
What's the prediction for January?
Hmm.
More homes, fewer homes, or about the same?
Simonson thinks inventory will probably stay below 650,000 in January,
Okay.
but then start to climb again by February.
So a little dip before things pick back up.
Right.
Anything else interesting happening with inventory?
There's a bit of a regional dance going on right now.
Oh,
Inventory is actually increasing in most markets, with the Sun Belt leading the charge.
interesting.
But the article predicts that this gap will likely even out in 2025.
Some more balance across the country.
Potentially.
That's good news for buyers who might be feeling squeezed out of certain areas.
It could be.
Yeah.
But let's not forget about those high mortgage rates.
Right.
Even with more homes to choose from, affordability could still be a major hurdle for many buyers.
All right, let's switch gears and talk about pending sales.
Okay.
Currently, we've got 269,000 homes under contract.
Mm-hmm.
What does that tell us?
Again, context is key.
Okay.
This number is actually down about 8% from the week before Christmas. But that's not really surprising.
No.
People tend to hit pause on major life decisions like buying a house during the holidays.
So we're talking about a temporary holiday lull, not a sign that the market is crashing?
Exactly.
Okay.
Plus, if we zoom out and look at the bigger picture,
Oh,
2025 is starting with more pending sales than we saw in the past 2 years.
that sounds like a good sign, right?
Yeah.
More people buying homes means a healthier market.
It does suggest some positive momentum.
Yeah.
But remember, this is still about 30% fewer pending sales than we saw during the peak of the pandemic frenzy back in early 2022.
The good old days when houses were flying off the shelves and bidding wars were the norm.
Those are certainly heady times, but perhaps not sustainable in the long run.
Right.
The big question now is whether those stubbornly high mortgage rates will put a damper on the recent sales momentum we've been seeing.
That's the million-dollar question, isn't it?
It is.
Simonson forecasts a 5% sales growth in 2025.
Okay.
But those high rates could definitely throw a wrench in things.
It's true.
We'll have to wait and see how it all shakes out.
Absolutely.
And that brings us to the topic everyone's been waiting for, home prices.
The big kahuna.
So what's the verdict? Are prices finally coming down?
Well, here's the thing.
Okay.
Despite the slowdown in sales and the increase in inventory, national home prices are actually up 4% compared to last year.
Wait, what? Prices are UP. But I thought we were talking about an affordability crisis.
We are, and that's what makes this so interesting.
Yeah.
We've got this tug of war happening in the market.
Okay.
On one side, we have low sales and rising inventory, which typically push prices down.
Right.
And on the other side, we've got these stubbornly high prices,
Right.
making it even harder for people to afford a home.
Exactly.
Yeah,
It seems counterintuitive.
it does.
But year-over-year price declines are actually quite rare. There are a lot of factors at play here.
Yeah.
Like seller psychology and the legal and tax implications of selling for a loss.
So even though the market is showing signs of softening, sellers are holding firm on their prices.
For the most part, yes.
Okay.
But that doesn't mean prices are immune to change.
Right.
There are other indicators we can look at to get a sense of where things might be headed.
Like those price reductions you mentioned
That's
earlier.
right.
The article says that 36% of homes currently on the market have had at least one price cut.
That's right.
Okay.
And that tells us something important about the balance of power between buyers and sellers.
Mm-hmm.
A year ago, we didn't see nearly as many price reductions.
So what's changed?
Well, for one, there are simply more homes on the market now.
Okay.
We're talking about a 27% increase in inventory compared to last year.
Wow.
But at the same time, sales haven't increased nearly as much.
Right.
Only about 4%.
So more homes for sale, but not enough buyers to snap them up at those high prices.
Exactly.
And that's creating some pressure on sellers to adjust their expectations.
So it sounds like we're starting to see some cracks in those sky-high prices.
Maybe.
But the question is, will those cracks turn into a full-blown collapse, or will things stabilize?
That's the million-dollar question.
Yeah.
Simonson thinks we'll likely see fewer price reductions in the spring.
Okay.
You know, when the weather warms up and more buyers typically come out of hibernation.
The spring housing frenzy.
Right.
It's like a real estate rite of passage.
It really is.
But those 7% plus mortgage rates could really throw a wrench into the works.
Yeah.
Even with fresh inventory and new buyers, if people can't afford the monthly payments.
Right.
It could force some sellers to get real about their pricing.
Absolutely.
It all comes back to those darn interest rates.
I know.
They really are the puppet masters of the housing market.
They really are.
And those price reductions are like a canary in the coal mine. Watching them closely can give us a clue about where the market might be headed next.
For sure.
So for anyone listening who's thinking about buying or selling in 2025,
Yeah.
those price cuts are a must-watch metric.
Keep an eye on them.
Got it. Now, I want to go back to something you mentioned earlier about the seller shortage.
Okay.
What's driving that trend in the first place?
Well, it's a bit of a perfect storm, really.
Yeah.
You've got limited housing supply,
Right.
especially in those desirable areas that everyone wants to live in. Add to that increased demand fueled by population growth, and you've got a recipe for a seller's market.
And we can't forget about the pandemic's role in all of this.
Oh, absolutely.
It really shook things up.
The pandemic caused this mad dash to the suburbs.
Yeah.
Remember all those stories about people fleeing big cities for more space?
I do.
Combine that with the record low mortgage rates we saw at the time.
Yeah.
And it's no surprise that prices skyrocketed.
It's like everyone suddenly decided they needed a home office and a backyard.
Exactly.
And now with rates significantly higher,
Right.
that affordability crunch is hitting hard.
Yeah.
It's especially tough for first-time buyers who might not have as much financial wiggle room as those who already own a home.
It's true.
So they're stuck in this catch-22.
Right.
They need a lower price to afford a home.
Yeah.
But prices won't drop until more people can buy.
It's a real conundrum.
It is.
And it's creating this ripple effect throughout the entire market.
Right.
With fewer buyers able to participate, demand softens, which could eventually lead to those price adjustments we've been talking about.
It's like a giant game of Jenga.
Haha. I like that.
Pull out the wrong piece and the whole thing could come tumbling down.
That's a great analogy.
There.
It highlights just how interconnected everything is in the housing market.
So what you're saying is we're in this delicate dance,
Yeah.
this search for a sweet spot where supply and demand and affordability can all coexist peacefully.
Precisely.
But finding that sweet spot is rarely a straight line.
Yeah.
There will be bumps along the way, especially with all the uncertainty around interest rates and fluctuating inventory levels,
For sure.
which makes it all the more fascinating to watch, right?
Oh, yeah.
It's like a real-life economic thriller.
It really is.
Every new data point is another plot twist.
Aha. Exactly.
Okay, so we've got this complex web of factors influencing the market. But let's zoom out for a minute.
Okay.
What's the bigger picture here? How do these housing trends impact the economy as a whole?
That's a great question.
Yeah.
The housing market isn't some isolated island.
Right.
It's deeply connected to the overall health of the economy. It's a major driver of consumer spending, job creation, and economic growth.
So when the housing market catches a cold, the rest of the economy starts sneezing.
Exactly.
And when the housing market thrives, the whole economy gets a boost.
It's a powerful force.
It is. So if affordability remains a major issue and the market continues to cool down, that could have some pretty serious consequences for the economy, right?
It's certainly a possibility.
Yeah.
A prolonged slowdown in the housing market can lead to a decrease in consumer confidence.
Okay.
People might hold back on big purchases because they're worried about their home values.
All right.
This could lead to less investment in new construction and ultimately drag down economic growth.
But on the flip side, if the market stabilizes and affordability improves,
Yeah,
that could give the economy a much-needed shot in the arm.
absolutely. A
Right.
healthy housing market,
Yeah.
where buyers and sellers are both active and confident,
Right.
has a ripple effect throughout the economy. Think about it. When people buy homes, they're also buying appliances, furniture, landscaping services. The list goes on.
It's true.
It creates a virtuous cycle of economic activity.
Wow, so the stakes are pretty high.
They are.
The health of the housing market isn't just some abstract concept.
Right.
It has real-world implications that touch every aspect of our lives.
It really does.
Yeah.
It affects our personal finances, our communities, and the overall well-being of the country.
Okay, so we've explored the major trends, the underlying factors,
Right.
and even the potential economic implications of this wild housing market.
Yes.
But now let's get down to brass tacks.
Okay.
What does all this mean for you, the listener? What are the key things to keep in mind as we head into 2025?
Well, first and foremost, remember that knowledge is power.
Okay.
The more you understand about how the market works,
Right.
the better equipped you'll be to make smart decisions, whether you're buying, selling, or just trying to make sense of the headlines.
And that's where resources like Simonson's article and deep dives like this one come in handy.
Absolutely.
They give you the insights and data you need to navigate this complex world.
Exactly. The second big takeaway is that patience is a virtue,
Okay.
especially in the real estate game. The market is cyclical. It goes up, it goes down, and it rarely moves in a straight line.
Yeah.
Don't panic if you see headlines about rising rates or slowing sales.
So don't make any rash decisions based on short-term fluctuation.
Exactly.
Focus on the long game.
Exactly.
And that brings me to the third key takeaway. Be adaptable.
Be flexible.
The market is constantly changing.
Right.
And what worked last year might not work this year.
It's true.
Be open to new information. Be willing to adjust your strategies. And don't be afraid to seek expert advice when you need it.
That's good advice.
So stay informed, stay patient, and stay flexible.
I like it.
It sounds like a pretty solid recipe for success in any market, not just real estate.
You got it.
And if you can embrace those principles, you'll be well positioned to reach your housing goals, no matter what twists and turns the market throws your way.
That's right.
All right, we've covered a lot of ground today.
We have.
From affordability woes to the possibility of a seller resurgence.
Mm-hmm.
But before we wrap things up, I want to throw out a bit of a curveball.
Okay.
A what-if scenario to ponder.
Oh, I love a good what if. Lay it on me.
Okay, so we've talked a lot about how those high mortgage rates are putting a damper on things.
Right.
But what if, and this is a big what if,
Yeah.
rates were to suddenly drop in 2025, like Simonson suggests is possible?
Okay, I'm intrigued.
Okay.
Let's play this out.
Say those rates take a tumble and fall back below 6%.
All right.
What happens then?
Well, at first glance, it seems like a dream come true for buyers, right?
Yeah.
Lower rates mean lower monthly payments,
Uh-huh.
which could potentially unleash a wave of pent-up demand.
Okay, so more people can suddenly afford to buy.
Yeah.
But here's where things get really interesting.
Okay.
Remember we also talked about how home prices have remained stubbornly high
Yes.
despite the recent slowdown in sales?
That's right.
And that's the part that has me scratching my head.
I know.
Even if rates do come down, will it be enough to offset those high prices and make a real dent in the affordability crisis?
That's the million-dollar question, isn't it?
Yeah.
It's like this epic battle between two powerful forces.
Right. Lower rates pulling affordability in one direction and those sky-high prices pulling it in the other.
So who wins this real estate tug-of-war? Buyers hoping for relief or sellers determined to hold on to their gains?
It's really too early to call.
Yeah.
But one thing's for sure.
Okay.
It's a high-stakes game with very real consequences for anyone trying to navigate the housing market.
And as we've seen throughout this deep dive,
Right.
there's no crystal ball, no easy answer.
Yep.
But we can arm ourselves with knowledge, right?
Absolutely.
Yeah.
Paying attention to those leading indicators like price reductions can give us valuable clues about which way the wind is blowing.
So it's less about trying to predict the future.
Right.
And more about staying informed and being ready to adapt as the market unfolds.
Exactly.
Okay.
And remember, this isn't just about numbers and data points.
Right.
Real estate is ultimately about people, about
Yeah.
finding a place to call home.
It's about those dreams of owning a piece of the American dream.
Starting a family, putting down roots.
Exactly.
And those aspirations shouldn't be overshadowed by market fluctuations or interest rate roller coasters.
I agree.
So for anyone feeling overwhelmed or uncertain about the future of the housing market,
Yeah.
what's your advice? Where do they go from here?
First, take a deep breath.
Okay.
It's easy to get caught up in the hype and the headlines.
Right.
But remember, the market is cyclical. It's been through ups and downs before, and it will go through them again.
Don't panic.
Yeah.
Easier said than done.
I know.
I hear you.
Yeah. But remember, making sound decisions starts with having a clear head.
Okay.
Don't let fear or FOMO, fear of missing out, drive your choices.
So step one, take a deep breath. What's step two?
Get informed.
Okay.
Do your research understand the factors that are driving the market in your area?
Right.
That's where resources like Simonson's article and deep dives like this one can be incredibly helpful.
They give you the tools to cut through the noise and make sense of the data.
Exactly. Yeah.
And don't be afraid to tap into the expertise of real estate professionals.
Okay.
A good realtor or mortgage broker can be an invaluable guide,
Right.
helping you navigate the complexities of the market.
It's like having a seasoned Sherpa guiding you through the treacherous mountain passes of real estate.
I like that analogy.
Yeah.
And remember, knowledge is power. The more you understand, the better equipped you'll be to make decisions that align with your individual goals and circumstances.
So stay informed, stay calm, and don't be afraid to ask for help.
Yeah,
What a great way to sum things up.
I think so.
Any final thoughts before we wrap up this deep dive?
Just this. Remember that the housing market is ultimately a reflection of us,
Okay.
of our hopes and dreams for the future. It's about more than just bricks and mortar.
Right.
It's about finding a place where we can truly thrive.
Beautifully said. So as you navigate the twists and turns of the housing market, keep those dreams in mind.
They'll guide you through the challenges and lead you to a place that truly feels like home.
And on that note, we'll leave you to ponder the possibilities and chart your own course through the fascinating world of real estate.
Yes.
Until next time, keep exploring, keep learning, and keep diving deep.